Recently, we experienced a hailstorm and my insurance company looked at my roof and agreed to pay $10,000 to replace it. A roofing contractor gave me an estimate of $8,000. Does that mean I just saved $2,000?
Actually, the way insurance claims are paid today in the state of Texas is like this. The insurance company, not some roofer, is going to determine the amount of the damages on that loss. And most of them use a process of doing a physical inspection. Some carriers want to see 4 or 8 hits per 10-foot by 10-foot test square on all 4 sides of the roof, or 2 sides if it's a regular gable roof. And once they've established damage, some will want to see more, 10 to 12 hits. It really can depend on different factors, how old the roof is. Different carriers might have different criteria. But once they establish that there's damage, they will create their own estimate. And many of them use software called Xactimate. Some use their own variation of that. But it basically breaks down what the current labor and material prices are for a particular market and is upgraded monthly. And so insurance companies are not arbitrarily assigning a dollar amount. They'll break it out. They'll itemize out how many squares. A lot of things. One thing that confuses a lot of people when they look at an adjuster's report is they'll see X amount of squares taken off and then a different value, a higher amount on the going back on. And that's because there is a waste factor with roofing. Anytime you get to a valley or a hit, you're going to cut some material and throw it away. And so just like a tile job, you're going to need to buy more material than what you tore off to get the thing finished right. But once they establish this amount, they will send you their adjuster's report. And in a hypothetical situation, say it's a $10,000 total loss on a roof. Well, in the old days, if you had a $2,000 deductible, let's say a $200,000 home with a 1% deductible, would mean you'd have a $2,000 deductible. And let's say it's a $10,000 roof. Well, in the old days, they would give you $8,000 and say, here you go, have a nice day. And then what would you do? You'd go get a bunch of bids, shop, try to find someone you trust. And if you could get it done for less than $10,000, then you save some money on your deductible. In fact, if you found somebody who could do it for $8,000, and you were confident that they were competent, then hey, you might have saved your entire deductible. But several years back, the state of Texas, basically the legislature came to an agreement with the insurance industry, and they started a process called recoverable depreciation on these replacement cost coverage policies. And a replacement cost coverage policy is what 99% of people that live in their own home and have a mortgage on it have. It basically pays for the full replacement, as opposed to an actual cash value policy, which you might see on a tenant dwelling or something with lesser coverage, and then they pay the actual cash value of it, what it was worth at the time of the loss, less the deductible. So you get far less money. But most homeowners have a replacement cost coverage policy. And when you do, what they're going to do is they're going to look at the age of your roof and they're going to say, well, this roof was 10 years old and it was a 30-year lifetime roof. So 33% of the age of this roof has already been used up. And so we're going to subtract $3,300 from your loss when we pay you that first check. So let's just round it to $3,000. Say they applied 30% depreciation on the loss. So on a $10,000 loss, they would subtract the $2,000 deductible, the $3,000 depreciation, and your first check will be $5,000. Now, a lot of people think that's all they're going to get. They think that they don't read or they don't understand their policy or don't read it closely enough, and they think $5,000, gee, that's not enough to get my roof replaced. And they'll sit on that check, and a year will go by, and after 1 year, in most cases, unless they file for an extension, they can lose the right for them to recover that other $3,000 of recoverable depreciation by not taking action and getting the roof replaced. And so we like to advise people that, hey, you kind of have a ticking time bomb from the date of the loss when you've filed that claim, in which time you need to go ahead and get that roof replaced and send the invoice into the insurance company. Now, when the insurance company receives an invoice for $10,000 because the roof was done for the same price as the adjuster's report, they'll analyze it. They'll say, look, we've already paid $5,000 on this. We had $3,000 recoverable depreciation. Our adjuster's report said $10,000. That's what the invoice says, and they'll release the final $3,000 to the homeowner, usually a week to 10 days after they've received proof that the roof is on and that final invoice. But let's say you went shopping, because that's what people do in a purchasing situation. It's normal to go out and look for the best deal, and that's how we're programmed to buy. Since we're little kids, we're looking for the best deal. So you end up finding somebody who'll say, hey, I'll do it for $9,000, and you think, hey, this is great. I'm going to save $1,000 on my claim. And when the invoice goes into the insurance company for $9,000 instead of $10,000, the adjuster reviews it and says, hey, they got it done for $9,000. They picked the roofer. We didn't make them use those guys. So we're just going to send you $2,000 instead of, and when the homeowner gets the $2,000, they go, well, wait a minute, on your adjuster's report, it said here you're going to send me $3,000 when I get this roof replaced. Right. And the adjuster's going to say, yeah, but we only owe to make you whole, to get you back to a full roof replacement. You got it replaced for $9,000. We've already given you $5,000, and you had a $2,000 deductible, so we're just going to give you $2,000 more. Sorry. But the downside is you probably got a guy who is cutting corners somewhere. He either maybe didn't put on new felt paper. He just tore off the shingles off the old felt, left the old felt paper down, and roofed down over that. He might have reused the old valley metal. He might be trying to recycle the autococks, the pipe jacks, instead of putting fresh ones on there. They may not be replacing all the vents that got hit by hail that the insurance company paid for. They might just be painting them and skating on it. And so you're not getting all the bang for your buck. I mean, insurance companies aren't in the business of going broke or grossly overpaying claims, see? So either he doesn't have insurance, either he's cutting corners on materials, or he's cutting corners on his overhead to be able to come in under what the fair going rate is. And so that should be a red flag when people come to you with pricing that's substantially less than what the insurance company's paying. That's a sign that they, even though they might be telling you they're going to do everything first rate, top notch, they're going to cut corners somewhere. Because if they're on the up and up, I mean, insurance isn't, like I say, grossly overpaying or trying to go out of business by overpaying losses.
So as a homeowner in that situation, I would have saved the insurance company $1,000 and gotten a $1,000 cheaper roof.
Yeah, and taking the chance of having somebody cutting corners, putting staples instead of nails, or cutting corners on that roof job. So it really isn't in your best interest. And so this is a different purchase than most purchases, in that in a roof claim situation, what your goal really should be is not how I can save my deductible, because that's not going to happen if they apply recoverable depreciation. It's just not. But what the best thing to do is to get everything that you can for that $10,000 loss. And that's what we try to do at our company. If somebody's got dented box vents, what we do is suggest, hey, you've got these 4 dented box vents back there. They've given you X amount of dollars for that. But, you know, you might get a lot bigger bang for your buck if you went back with ridge vent. And we can apply the dollars that they gave for your box vents, fill those holes with plywood, felt over it, and then put ridge vent on and actually lower the temperature of your attic, make your AC not work as hard, lower your monthly payment on electricity. and you're still just using the same insurance dollars, but doing it in the smartest way. And that's what we're about. It's helping the customer get the most bang for their insurance buck.